All right, let's do the run through, man. I'm interested in how this month looks with all of our rate drops and our news and our election coming and our seasons changing. We want to run through the numbers for September. What do we got?
Well, first of all, yep, we're both in our hoodies because today it was like 45 degrees. So it's definitely fall. And that typically is a signal for things to start cooling down for our housing market too. See what I did there? And that's no big surprise in the numbers here. So you can see on the first big chart, we were down a bit from the previous month, 7% to be exact. We're just under 2,100 houses sold in September of this year. Compared to last year, we're actually up 3%. I think that's encouraging, but things are definitely starting to cool off as we get into the end of the year.
And anytime we get news like this, because the markets go up and down month to month pretty much every time, it's good to compare it to last year. And we are entering the seasonal slow part of our year, Q4. So, not surprised. It's nice to see that we're doing a little better than last year. I am a little surprised by that. But as far as the sold versus list price, we are about as expected, right, Danny?
Yeah, there's a little something funny going on here just at the end of those lines where you can see that, we had our big crossover just a few months ago where the average sale price was starting to dip below the average list price. Typically, that's a sign that, the hottest months of the summer in terms of competition, where we're getting a lot of multiple offers or a lot more homes with multiple offers that would drive the price up beyond list price, that was starting to kind of taper off. So you can see that those lines really started to separate just a couple of months ago. But oddly, the list price actually ticked upward this month while the sale price continued to go down slightly. And so I don't know exactly what that represents, but there's still a bit of a disconnect between where houses are being listed and where they're ultimately going to sell. The other notable thing about this chart is that even though things are down month over month, just about $1,300, so percentage-wise, that's basically nothing compared to last month. But if you look at this compared to this time last year, we're actually up $22,000. So that's a 6% increase year over year.
And that's going to continue, I think, until we balance out the supply and demand difference that we have. Housing prices are just going to keep going higher. That's the big benefit of real estate. There's only one lot in the world that is your lot. So it has a value. There's a demand for it. It's going to keep going up. So not surprised by that. Not really surprised by the donut chart here, the over asking percentage either. That's a big number that are selling for below asking, 24%. But that's what we're seeing in reality. If you have buyers out there, unless they're going in the first weekend, which some houses still are, 9% of them apparently still are, selling quickly and over asking, you are going to get a deal on the house. That's the benefit of going into Q4. And the rates are coming down a little bit. We'll talk about that later, but I don't think it's sunk into everybody yet. I don't think we are normalized yet. It's slowing down a bit. Average days in the market are reflecting that as well, right, Danny?
Yeah, and just one more point on that whole over and under asking on the donut chart. That this is really meant to measure the extremes, right? So everything in the blue is within plus or minus 5%. So the stuff in the orange is not just stuff that went below asking; it went 5% or more below asking. So that's a pretty big swing compared to what we've seen just a couple of months ago. And yeah, you're right. Just like we saw with prices coming in below asking, again, that's a reflection of a lack of competition. And if you're not getting multiple offers or any offers, then things are sitting longer. And that's really what we're starting to see here. This is up notably over the same time last year. We're looking at an average of 23 days on market this September. Last year, that was only 19. You can see the trend is similar. Both median days and average days on market are up more than just a touch over where they were this time last year.
Yeah, so I think what we're going to see more as we go on, and this is just a prediction. I don't have any numerical data to back this, but I think what tends to happen is sellers will keep pushing the envelope, obviously, as much as they can, and buyers will get over it eventually. At some point, the organic demand for a house for a price will exceed its value. When you start to see $400 a square foot for an average house, some buyers are just going to say, no thanks, we'll just wait. Has a lot to do with the rental market as well. But as we start to balance out, these days of the market numbers are going to grow. I think that's a good thing. I think that's going to lead to just a more balanced market overall. Sellers aren't going to love that. But if you're selling keep in mind you're probably buying something else. So everything averages out. Buyers, this is good news, along with a lot more price reductions in their sales.
Yeah, and this just like the previous graph. I mean, if you look at it, the curve is about the same as the previous years. There were almost a third of homes sold after a price reduction in September this year. But if you scroll back across to the left and look at last year, it was only about a quarter, right? So definitely different this year in terms of it's all pointing back to the same thing. The market's kind of finding that natural bottom from where sellers want it to be versus where buyers are actually saying it is, right? And so we can see that played out over these last few charts.
Yeah, and that's a great way to think about that too. So the rates are down. That's why I think the market is balancing out a little bit more, because rates are lower than they have been in the past 2 years. Supply is around the same, maybe a little lower. That difference in interest rate is significant, and it should be spiking sales. It's not. So part of that is seasonality, like you said, with the curve, but the fact that it's higher on average leads me to believe that we're starting to balance out the market. Danny, do you have a month's supply of housing?
Yeah, sorry, we blew right through that on the first chart, but yeah, with 2,070 houses sold in September and a little over 3,200 currently on the market that are active, that puts us just over 1.5 months of supply, which is higher. Back in the summer, we were looking at just 3 weeks or 4 weeks worth of supply, and now we're talking about 1.5 months. Historically, that's still pretty quick. Definitely a change and a movement upward from where we've been.
Yeah, and I think that most people will be happy right around that 2-month mark, between 2 and 3 months. Put your house on the market, get showings, you get an offer, and sell it between 2 and 3 months. That gives you time to look. Now we don't have to find a house before you list your house. Gives a little more flexibility as far as I want to move, but what is there? You can actually get started with that process earlier. So all signs are pointing to a more balanced market. Again, depending on which side of the table you're on, that's good news or bad news. But I think just in general, for most people, it's better news. So we'll see how this develops. Obviously, we're running into the slow season for real estate, and we'll have to compare the differences with the annual averages, which, because we've been doing these numbers so long, we have the ability to do. And then we'll see how next year rolls in. Danny, do you have anything else to add to this?
Yeah, I guess maybe just one other point on the interest rates, and it's that the people that are on the sidelines right now are both first-time buyers who are just struggling with the math of it all and trying to get into a place that they can afford. One thing for our prices to be up, but to add insult to that injury, with rates being where they've been now for quite some time, it just makes the math really hard. So you've got that group of folks that every time that rate goes down, more and more people now can get into the game and start to look and buy a house. There's also the whole lock-in effect, which we've talked about before. I'm sure you've heard it in other places, but there's still a lot of people that have mortgages that are at 2% range and the 3% and 4%. A lot of people couldn't have the exact same house at 6% or 7%, and certainly not at 8% of an interest rate. So, as this comes down, not only is it bringing people in off the sidelines that are first-time buyers, but I think the further it goes, the more it starts to unlock that kind of middle of the market where you've got people that are maybe going to start to upgrade and do the step up from their current house to that bigger thing. And up until now, that's really not been a reality for a lot of folks. Interested to see how that plays out.
Yeah, that's a great point. And we'll see how the market shakes up when we get into Q1, but we're going to continue following this all the way through the winter months. Danny, thanks as always for pulling numbers, and we'll see you next month.